Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a wonderful weekend despite the market conditions, and that is exactly what we're going to get into in this video. We're going to be making sense of it all, as there's a lot of fear gripping this market, and we're going to be putting things into context. We're going to be reminding you of what's really taking place here, and really grounding you in the fact that you guys are a part of a very volatile asset class, and volatility is just a part of any emerging market. Any new, fresh, speculative, small market cap market asset is going to move in this kind of a volatile fashion. You guys know that we've often compared Bitcoin and certainly many of the cryptos within it to what took place with the internet and many of the stocks to come out of it. And there was volatility associated with Amazon in the early days, and this was a video that we made over a year ago now, in August 2020, saying that Bitcoin is following Amazon. And that's what we're going to be talking about, and we're going to be highlighting that from a Twitter thread from Raoul Pal. We will talk and get into some of the price action. It's been a pretty brutal couple of months, guys. I mean, we essentially went from a $3 trillion market cap all the way down to under 2 trillion. So we lost nearly a third of our entire market cap. And it's been somewhat expected. I mean, we didn't finish. One reason there's so much fear gripping this space right now is we didn't finish 2021 in a 2017 or prior to that 2013 fashion. Yet people are looking at the start of 2022 and saying we're starting it in a 2018 or prior to that 2014 fashion. Now, I would argue that if we didn't finish in a 2017 or 2013 fashion, we're probably not going to see 2018 or 2014 take place. We are starting the year in rather a negative way. However, I'm still very optimistic and bullish on the crypto space. I think that this, in terms of crypto, in terms of where we are now to where we're going, where we play a substantial role in everybody's day-to-day life, and a lot of the infrastructure of the world is built on top of blockchain in the same way that it is on the internet, and you know, prior to that, the technological revolution was the PCs. We've not even really started that race. We've got a long way to go, and we're still a very small market cap in the face of that. But that will become apparent as we go through with this video. So I think people are very fearful that we're just going to free fall and see a kind of 2018 or 2014 sort of price action. I don't think that's the case. I think ultimately people are getting shaken out here. I think you have a lot of big players who know what they're doing here. They're playing a different game where they can be more patient and accumulate at different levels. And ultimately, I think retail is getting absolutely shaken out and thrown around. And I think people are worried that this is your potential head and shoulders setting up. This was the last time we had this structure at play. You can see the wick that we got down, and then we actually saw continuation when everyone was bearish. It caused a short squeeze, which we did speak about. We reckon a short squeeze is indeed coming, certainly given the sort of structure that we're setting up now. But very, very applicable structure, certainly with this right shoulder or potential right shoulder to what you're seeing today, ladies and gentlemen. You put a toe below it, and then you see that continuation and that buyout, and that was largely propagated by short squeeze. Everyone was very bearish on Bitcoin back there. So I ultimately think we are going to see continuation. There's a macro game taking place that we've spoke about and we've covered on this channel in great detail, and that is with the dollar and Bitcoin. That is the real sort of macro game that's being played here with the cryptocurrency space, and we know that the Fed have talked about upping rates, so on and so forth. We are a very mature or more mature market than we've previously been. March 2020 was the most significant event for Bitcoin because it really allowed for this run to take place due to the inflationary pressures, that printing all that, you know, that governments had to kind of take those measures to keep the economy afloat. But now we're seeing a slowdown of that, and this is kind of to be expected. It's kind of why the 4-year cycle theory, or certainly how we were expecting 2021 to end, kind of got thrown out the window. But if that's the case, and we've not seen a repeat of prior bull markets, which have to end really in a blow-off top, I would argue that we're not going to see similar action to what we saw in 2018. I don't think we're going into a bear market, is essentially what I'm trying to say. Ethereum got absolutely battered. You could potentially say it's setting up some sort of a head and shoulders itself if it comes down. Cardano, it's been brutal holding ADA. But one thing that I'm very optimistic about with ADA is what's around the corner, and that is, of course, the turning on of the DApp ecosystem. I think this is going to see huge adoption take place for Cardano, a usable DeFi space. There's lots of FUD getting thrown around at the moment in regards to the concurrency issue, the fact that there's going to be quite a bit of congestion potentially on the blockchain given to the UTXO model. but we're going to cover that in a different video. So really what I want to get into, this was another interesting, we looked yesterday in regards to Bitcoin at a lot of the indicators that were pretty much at the floor. Ultimately, you know, Bitcoin is, in my opinion, oversold at this point. And this is the bear market 2018 and the bull market 2018 to 2020. And you can see the levels that we're at, you know, are historically very low and cheap levels. I'll just move my head out of the way slightly. Let's get into the Twitter thread from Raoul Paul. He said, just a reminder, you can't use daily or weekly charts if your horizon is years. You're either in this for the network adoption over time, or you are a trader. I am not a trader in crypto. I couldn't care less about 50% swings in a 70 vol asset. So he's talking about what's really going on here. You guys know that we believe that blockchain technology is a kindred to the internet. And that sort of technological boom. And prior to that, a kindred to the PC revolution and how that sort of changed everybody's life and has implemented itself into day-to-day life. That's what we think is taking place with blockchain, and we're very early within that race. So we'll start with the first thread from him. In the end, the only technicals that matter, Metcalfe's law matters more, are long charts, 48-month exponential moving average, maybe the trend since 2015, but same as EXP. I seriously doubt the bull market ends at regression trend. It should see higher one standard plus diversion. So what he's talking about here is the fact that he doesn't think the actual bull market is over yet. And I happen to agree with him. You guys know that we do indeed agree. Here's another one. Bitcoin is cheap versus Metcalfe's law, and has been for a long time. My guess is it's because there is less network applications on Bitcoin currently than ML would prefer. Ultimately, you guys know that I actually think that your smart contract blockchains are going to have far more of an impact on the world than Bitcoin. Unless Bitcoin really sees that store of value label being put on it and globally adopted as that, you can do. There's far more scope and far more usage that comes out of things like Ethereum, Cardano, Binance Coin, Solana, etc., because you can build really anything on these and really take out any kind of third-party interaction. Let's talk about the next one. Maybe the macro weight on BTC and digital assets as a liquid ISG reduces, but never listen to consensus in terms of rate. It's usually wrong, and network models assess assets genuinely do fine with rate rises anyway. This is Amazon. And I want to cast you guys back to one of the videos that we made in August 2020. So this was just after the March sell-off, and we were saying, look, you know, we're still buying Bitcoin here and plenty of other altcoins. And the title of the video is Bitcoin is following Amazon. And we were essentially putting the use case or the argument, and the next chart that I'm going to show you is really going to tie this in very well. We were essentially saying that, you know, very similar things have taken place. Amazon came out of a technology, Bitcoin came out of a technology, and they're following a sort of adoption curve, if you will. And this is, of course, something that Raoul Paul is stating. And he goes on to say, I'll leave you with an interesting comparison. Amazon is a Metcalfe law stock back in 2003 to 2011. It looked like this. And you can see you have these frequent pullbacks. So we're not potentially now not following the 4-year cycle theory in the sense that we're going to see and be so tethered to halvenings, which is what causes the Bitcoin 4-year cycle theory. And that's how much of an immature market we potentially were, because we were following our own fundamentals. We weren't tethered to the kind of macro scheme of things, which we are now. So do we see a different kind of style of bear market where we don't witness this? We maybe witness this. Continuation, in more of a kind of stockish manner. And he's pointing out that this is the sort of new route that Amazon took after the kind of boom and bust. And we'll go on to the next couple of tweets. Here he's saying, which rhymes with Bitcoin. And of course, he's looking at the sort of boom and bust that take place. This is the one that I want. Do we now see, so this was your .com boom over here, where I'm moving my cursor for those of you that can see it. Do we now see, after this significant 94% drop, more short-term drops? Like this was 57%, this was 62%, this was 30%, and it gets, the volatility decreases over time. That makes a lot of sense as we get bigger as a market, but yet we're still going to have volatility attached to it. And you can see marginally higher high, you come down, you don't quite break your previous high, and that's something that's important to not do. I mean, we still haven't put in a new low here, and we've certainly not put in one here, which is why I don't get people calling for bear markets. So I hope this is all making sense. I hope I'm putting some people's minds at ease. What keeps me up at night is you guys. The fact that I know that a lot of people are getting very scared and shaken within this market. And like I say, if I didn't invest in times of fear in 2018, 2019, and 2020, I wouldn't be where I am today. It's literally changed my life, taking advantage of that. And the reason I invested was because ultimately in 2018, I got faced with this awful proposition that my portfolio had sold off by nearly 90%. And I was left kind of the monetary side of things. The explosive growth had kind of gone out the window and hadn't played out in the way that I had hoped. You know, in 2017, a lot of people like myself thought crypto was going to keep going up forever. Naively, and it's a lesson that a baptism of fire that I had to endure. And ultimately, what left me in this space was, okay, well, what's actually going on here? And that's where I found my beliefs that this is a technological revolution that's going to change the world. And I don't think that's just been plucked out of the atmosphere. I think that is fundamentally backed, and we're already starting to see that as the days grow, as we move on as a space, we see more and more adoption taking place. And I argue, and the whole concept of Metcalfe's law is that adoption is correlated with price. And the greater adoption that you see, the higher the price goes. And that's always been the value proposition. When you look at the Bitcoin chart, that's exactly what you're looking at. And for me, the thing that worries me the most is you guys, and that you guys lose money, essentially. Even though I'm not a financial advisor, and we do state that on every single video in the comments, in the description, we always have a disclaimer because we have to, because people just don't want to own up to their own actions. I do genuinely worry that people can't handle this market and that they get shaken out and they lose money. And there's no better place to lose money than the crypto space. Trust me on that one. You know, this is a hard market to time. It's a hard market to be in. But one thing that I'm very confident about in myself is that over time you're going to win as a cryptocurrency hodler. And it does sadden me, and genuinely does at times keep me up at night, thinking about some of the people that can't handle this. And that end up losing money as a result of it. That's the investment world. Unfortunately, finance does not give 2 cents about your feelings. Fortunately or unfortunately, that's just how it is. And this is a game this is a cutthroat game that we're playing, where you need to leave your emotions on the table, and you need to be a hodler, in my opinion. I don't think people do very well trading. In the traditional markets, most people lose money trading. And even the successful traders, they often lose more times than they win, but they have stop losses and methods to kind of deal with that keep them in the profit. You should be hodling through this, in my opinion. If you can't handle the heat, there's that great saying, get out the kitchen. Don't risk more than you can afford to lose. I am all in crypto, and I often explain this to people. I am young enough to the point where I could afford to lose everything and pick myself up, brush myself off, and get on with my life and look for the next thing. That's just the mentality that I've adopted, and the reason being is because I've had to do that on multiple occasions throughout my life. And from the bottom of the barrel, the only way is up. So I'm very comfortable with that. So for me, it's not such a risk. I'm not going to lose any of my houses or anything like that as a result of it. You know, I make sure that you don't want to bet more than you can afford to lose, because in the investment world, you know, one mistake, especially if you're very leveraged elsewhere, it can be pretty brutal. But I ultimately think we're going to see more continuation within this. I think a lot of the fear is unwarranted. We'll see what the next week brings us. If we continue selling off, we will come and take a look at things. But ultimately, from where I'm stood now, I agree with Rob Paul. I think that we're still yet to see a lot of adoption come to the crypto space. And there's a lot of money that flows in with that. So we will keep you up to date daily. Hang in there, guys. It's up to you guys, but I'm personally hanging in there. I have been since 2017, and it's done very well for me. But we'll see what the future brings. So thank you very much for watching, ladies and gentlemen. If you've enjoyed the content, a like is always appreciated. So is a comment. Remember, we do have the Discord in the link below. Join a like-minded community. Very, very strong-minded individuals within that Discord. Big shout out to you guys. You know who you are. And I'm going to love and leave you on that note. So enjoy the rest of your Sunday, guys. Plenty of videos coming out for you today, and I'll catch you in the next one.